Good afternoon, and thank you for joining us for the Future Forward Summit, the new CAS niche crypto advisory revenue stream opportunities. So I am Gary Dehart, the host of Future Forward Summit and host of Accounting Insiders podcast and the publisher of Insightful Accountant and Tax Practice News. Our presenter is Sonia Dumas of Curio House. And Sonia, I lost your bio. Oh, here we go. Got it. You know what? I never hit paste. So she's the founder of Curio House. As a cryptocurrency educator, she's taught thousands of financial professionals about the future of money and how to grow their pipeline by leveraging the next generation of technology. And that certainly has been it's been in the news past week and a half. It's been in the news longer than that, but certainly got a spike in the past week and a half around crypto. So as I said right before we went live, I always like to ask a silly question while people file into the room, so to speak. And that is, since you've been all around the country, what's your favorite food?
Ooh, my favorite food. I default to sushi. Yeah. Even when I lived in Colorado, I would have these sushi cravings in the middle of February. So sushi is my thing.
Your Bay Area roots?
Yes. I can't get away from the ocean.
All right, so a couple of housekeeping items before I turn this over. So CPE is available for the session, and just like any other CPE session, you have to answer at least 3 of the poll questions, and you have to be in session for 50 minutes. If you have any questions, we ask you to put them in the questions panel. Chat is disabled, so put them in the questions panel. We will attempt to get to those at the end of the session. A link to the recording will be sent to you afterwards, and along with the CPE certificate will be sent afterwards as well. And once we get this processed, the recording processed, it will also be available on our YouTube channel. Once I turn this over, I will put the link to the YouTube channel and a link to the slide deck in the chat, which you will be able to download from the chat. And so without any further delay, Sonia, thank you so much for sharing your knowledge with us today.
Absolutely. Absolutely, Gary. Thank you for that. All right. Well, welcome, everyone. We are going to just dive into it. And so, the goal of this session is to be able to help you think strategically about really, I call it the future of financial advisory. Specifically, how the risk and rewards of blockchain technology really creates advisory opportunities. And so today we'll kick off by looking at the Q4 state of crypto. I don't necessarily know how much you know, so I just want to give you a quick background on what's going on with crypto as of Q4. And then we'll dive into the future outlook. And this will primarily be based on how Fortune 100 companies are adapting to the advisory opportunities. And then lastly, we'll also take a chance to focus on what advisory opportunities that are available to you. So the focus is really to see the short-term and long-term picture first, so that way you can decide how your firm will adapt and shift in the years ahead. So let's dive in, and obviously if there's time, we'll open it up for questions as well. But first, we're going to kick off with your first poll. So let's get right into it. So just a quick yes or no. Or I don't know, do you have actively, like any clients, investing in cryptocurrencies? So feel free to answer that first poll. We're getting it done right out the gate. Gary, I'm not sure how much time everyone has to answer, like 30 seconds, a minute?
Yeah, roughly 30 seconds.
Okay. Great.
Is a good number.
All right.
I kind of monitor it too. And once I see that most everybody's answered, we'll get that shout out too. So we're about 5 seconds out to close it down.
Great.
And I will share the results in about 3 more seconds.
Or active.
And 1.
There we go. All right. Yes. So majority of the room. Great. Good to see. All right, let's keep moving on. So let's dive right in to, this objective view of what the state of crypto is this quarter. Now, for some of you who may not know, Ray Dalio, he was anti-crypto for a long time. And in 2021, he's changed his story. But one of the things that he said that I find to be true in crypto is that, and it sums up crypto quite well, if you're not aggressive, you're not going to make money. But if you're not defensive, you're certainly not going to keep it. Well, investors only listened to the first part of Ray's insight, because over the last 18 months, investors and institutions around the globe have aggressively invested over $41 billion into cryptocurrencies and blockchain technology, and they're pretty synonymous. So the cryptocurrency market was the first to rebound in 2020. And since then, it has experienced exponential growth over the last 2 years. Now, sights were set on making money. The problem is not enough focus was made on the defensive side of keeping it. And so back in 2021, the market hit an all-time high of nearly $3 trillion. And from December of last year until now, the market has corrected over 70% from its high. Now, while this downtrend was already in progress in December of 2021, it accelerated with the collapse of a major crypto project called Terra Luna back in May of this year. Now, this event was the triggering domino that led to the first wave of crypto hedge funds and lending platforms collapsing, such as you may have heard of Three Arrows Capital, Voyager, and Celsius were some of the big names. Now, the crypto market is small. And just like how banks lend to banks, these platforms were lending and borrowing to each other. And as each of these platforms started to collapse, what we saw was that intelligence does not make a person immune to greed and extreme risk. Well, months later, the second largest and quite frankly, one of the most trusted exchanges, FTX, was gambling with investor funds, and a complete lack of internal controls led to something that was actually worse than a bank run. You see, FTX single-handedly destroyed trust in third-party custodians for now. And so this widespread mistrust led everyone to be suspicious of any platform that was holding their crypto. And so investors and institutions, they were withdrawing their crypto from any platform that it was on, regardless of if the platform was doing something wrong or not. And so because of this, many platforms have faced insolvency, like BlockFi, Galaxy Digital, and Genesis Trading. Now, what's interesting is that this collapse was not about Bitcoin or blockchain technology. It actually highlighted the reason Satoshi Nakamoto created Bitcoin in the first place. So investors wouldn't have to trust a third party like an exchange or like a crypto lending platform to hold their crypto. Because one, the trust issue of you don't know what someone's doing with your funds when you're not looking. And so the mantra of not your keys, not your crypto has returned to the space. And one of the attorneys, Bromley, who's been working with the FTX bankruptcy, he noted that the major reason this happened was because there were no corporate controls to ensure that investor funds were properly protected. Now, technically, Forbes actually has a list out that shows all of the filings that the FTX did with the SEC, the CFTC. They filed all the right paperwork. They had all the right licenses. The problem is their downfall was internal management. No one was actually tracking that they were actually doing their jobs correctly. Not even Sam was keeping track of the books. And so Forbes magazine was able to, and this came out about a week or so ago, was able to compile a list of institutional investors and service providers that have worked with FTX since 2019. And that's when the exchange launched in 2019. Now, what's interesting is that prior to the collapse, many of these big names did not see Sam and his inexperienced team as a red flag. You see, as regulations come down the pipeline, the crypto exchanges and platforms, especially for the crypto exchanges and platforms, one of the key lessons from this collapse is that a part of due diligence has to place much more scrutiny on the team. No different than you place scrutiny on the services and the products and the licenses that a company has. Now, similar to Lehman Brothers and Bernie Madoff, it appears that as long as people are earning a lot of money, few ask the hard questions that would end the party. And so there is an FTX hearing approaching this December. And while no one in crypto is really expecting anything significant from this hearing, but what we do expect is that 2023 is likely to be the year that crypto sees more global regulations. And you notice I'm emphasizing global because it's not just a US thing. Crypto is borderless, and so is blockchain technology. And so this is more about what global regulations will look like in addition to what US regulations will look like. But in the meantime, unlike Bernie Madoff, who was promptly arrested back in 2008 for his fraudulent activities, Sam is a featured guest speaker at today's New York Times Deal Book Conference. You know, it's actually quite appalling to see that someone can wipe out over $40 billion in value within a month, and there's no immediate response from the authorities. So it'll be interesting to see how this saga ends for Sam and his teams and the other crypto platforms that also went under because of the lending and borrowing that they were doing with each other. So the state of Q4 is filled with a lot of losses due to third-party bankruptcies and just overall fear in the market. So that's the state of it. Now let's look at what does this leave for the future of Bitcoin and blockchain technology. And I actually see that it actually sets the stage for what's next. You see, what we're experiencing in real time is similar to the internet adoption cycle of 2000. So right now we are in the trough of disillusionment as markets and regulators and businesses cross the chasm from inflated expectations into an age of maturity. Now it's taken nearly 13 years of growth to get to this point. So the next 5 years is about crossing this chasm where digital assets will be the norm and not the exception, meaning that more businesses and individuals will use Bitcoin and blockchain technology as an everyday part of life. Now, the news just came out on November 28th, so 2 days ago, that just a few weeks after the FTX collapse, investment giant Fidelity has launched their new retail crypto trading accounts, despite pushback from US lawmakers. And here's a quote from Fidelity. They said, "A meaningful portion of Fidelity customers are already interested in owning and using crypto. We are providing them with the tools to support their choice so that they can benefit from Fidelity's education, research, and technology." And as of the launch, the only cryptocurrencies that Fidelity is offering on their platform will be Bitcoin and Ethereum. But Fidelity did write that additional cryptocurrencies are being evaluated to expand trading opportunities over time. So Fidelity, a $4.5 trillion asset manager, has not lost sight of where technology is heading. And they plan to grow shareholder value by giving investors access to Bitcoin for now. And here's the thing, Fidelity has been doing their due diligence about the appeal of digital assets and finding ways to monetize this technological shift. Now, there was a recent survey of institutional investors that shows that the high potential upside, the innovative technology, and decentralization are the top 3 reasons that multi-billion-dollar institutions and corporations are seeking to add digital assets to their operations and their investment strategy, meaning that the accounting teams at these firms are learning to manage and control an entirely new asset. This also means that they have to understand how Bitcoin, blockchain technology, and digital assets function in order to do their jobs. Now, this also means that more and more businesses will be looking for experts to help them navigate the accounting jungle of crypto when they start to accept Bitcoin as payments from their customers. And you see, when it comes to crypto, many of us pay attention to money flow, where the money is flowing into and where it's flowing out of. And money flow represents opportunities to show up as an advisor and an expert, which can translate into premium fees. For example, There's a tax advisor I know of who experienced some exponential growth in profits when he started advertising that he helps clients reduce their crypto tax bill. That was a smart move on his part, as many people, especially for the 2022 tax year, will be looking for tax savings wherever they can find it. And clearly, VC funds, financial advisors, high net worth investors, and family offices are clearly more aggressive about incorporating, buying, and investing in cryptocurrencies than traditional hedge funds, pension funds, and foundations. And rightfully so, because the collapse of FTX is making everyone reconsider who they trust to custody their digital assets. And for those of you who may not know this, JP Morgan is aligning itself to be a serious contender of digital asset management. Now, since 2015, they have partnered with over 25 of the world's leading banks to simplify, streamline, and earn revenue from this technology. JP Morgan announced that it has expanded its plans to develop blockchain-based identity systems. In addition, the global investment banking giant is also expanding its Web3 strategy, and it launched this particular program, Onyx, back in 2020. And just remember, it's all about the money. Blockchain wouldn't be a thing if there wasn't money to be earned or saved. Now, every financial institution is looking to grow profits, decrease expenses, and increase shareholder value. So being able to validate and confirm information instead of nanoseconds versus days is an efficiency that leads to the bottom line. And this also places auditing in real time. You see, we have yet to see how the monetization of our financial information is used globally once more and more payments find their way onto the blockchain. Now, technology is automating the manual side of accounting at a breathless speed, which is good news because what will come of it is that it will create demand for advisors and experts who can help a company look at the data and decipher a strategic plan to manage cash flow. In fact, the minute you find out that a client plans to integrate blockchain technology into their operations, the first question to ask is, what is your game plan for managing cash flow? And if they don't have a plan, that's where your advisory services can come in. And banks aren't the only ones interested in revenue growth. You see, each year since 2020, more merchants are accepting Bitcoin as payments. This means more dynamic accounting systems will be needed to help manage the flow of invoices paid in crypto. So follow the money. If Fortune 500 companies are moving into crypto, it's only a matter of time before Main Street and e-commerce businesses follow suit. And once again, advisory services for crypto payments is likely to generate premium fees because so few accountants are experts at it. Now, eventually, the day will come where every enrolled agent is a cryptocurrency expert. But that day is not today. And at some point, fees will be commoditized again. So in this case, the early advisors will extract the most profitability. As the saying goes, when it's common, it's cheap. When it's rare, it's expensive. And what's the reason why billion-dollar companies are pushing their accounting teams to innovate with cryptocurrencies? The name of the game is users, customers, clients. Everyone is looking for an edge to gain more market share in their industry. And if this technology will attract new customers, then expect to see more digital asset products roll out over the next 3 to 5 years alongside regulations. And Visa has for several years now, they've been working to keep their 70 million merchants on the cutting edge. In fact, Visa is using blockchain technology to expand their payment services where for the first time in Visa's history, they're expanding into a direct-to-consumer services. So the Visa card right now in your wallet, it's connected to a bank or an intermediary, Wells Fargo, Capital One, Bank of America, a credit union. Well, Visa is setting up systems where consumers can manage their finances directly with Visa, cutting out intermediaries like the bank. And Visa, back in November, filed several trademarks as they are building out their own crypto wallets for consumers to directly interact with. Now, think about this. This means if a consumer has a crypto Visa wallet, they can use that wallet to pay for an invoice, even if the merchant doesn't accept crypto, because Visa settles in whatever the merchant chooses on the back end. That could be dollars, euros, or Bitcoin. This means that for some people, Visa becomes their banking portal instead of their local bank. And PayPal is not waiting around either, as they also filed trademark applications because they're in the process of creating their own crypto wallets. Now, why should you be concerned that these two payment giants are building out new services and technology around this space? And one of the things you have to recognize is that everyone's creating their crypto wallet and they're pushing to launch it first because they want the most users. The name of the game, just like all social media, right? The name of the game is users, customers, clients, attention, because from then you can truly grow profits in a way exponentially, because selling to an existing client is actually more profitable than trying to attract a new one. But once again, why should we be concerned that these two payment giants, they're building out services in the crypto space? Well, like I said, follow the money. In the next 7 years, millennials, an entire generation who live digital lives, are coming into about $20 trillion of wealth. And notice how the curve starts to kick up in 2023. The millennial mindset is, why do I need an expert when there's an app for that? My app tells me everything I need to know, even their financial outlook. However, apps right now don't provide strategy, and apps assume the users know what they're doing. So whether it's their business or personal finances, they need to see value above and beyond what their apps can do. So communicating your expertise in a way that shows them the limitations of their apps, but also helps them feel in control of their future, will go a long way towards gaining trust of these digital natives. And what's interesting is that all generations see crypto more from the lens of an investment than a transactional currency. Bitcoin was originally created to be more of a currency, but the narrative has shifted more towards an investment, especially in the last 2 years. So what matters is that amongst the generations, usage is increasing, meaning that more strategic help will be needed to navigate the taxing side of crypto for starters. And yes, there are obstacles along the way. Fidelity, in their research, they found that the primary obstacles to investing in digital assets includes, at the very top of the list, price volatility, which is the greatest overall barrier to investments as reported by investors surveyed, specifically 50%. And this is actually consistent with last year's study as well. Now, other concerns cited by investors includes a lack of fundamentals to gauge the appropriate value. Well, as we all know, cryptocurrencies is very volatile. It moves all over the place. So what are the fundamentals to help gauge appropriate value? That was another major concern. Then the concerns around security, that was high on the list. Market manipulation was also very high on the list. I can tell you that crypto exchanges, sometimes they, not sometimes, a lot of times, they have the ability to trade against their clients because they see how everyone can trade. They can make some market shifting moves in their favor, basically to liquidate anybody who's doing some crazy over leveraging, which actually happened with the Terra Luna collapse. But market manipulation is definitely high. And then further down the list, it's concerns around regulatory classifications of certain coins as unregistered securities. Now, what's interesting when I was reading this study is that, or this survey, is that many institutions are actually quite agnostic when it comes to the price volatility, because they're looking at this from a very long-term perspective. They're looking at what's going to happen over the next 3, 5, and 10 years. And that's something that we should focus on as well. What's the long-term perspective of this? So with that, we're going to kick off a quick poll. Yes. So do you plan to create services for crypto clients in 2023, having this context in place? I'll give everyone 30 seconds. All right.
All right, we'll wrap this up. If you need the CPE, go ahead and participate. We're going to close it out in about 3 more seconds. 3, 2, and 1.
All right. Oh, that makes my heart feels good. We need it. Oh my gosh, we so need more services for crypto. All right, let's move on. So, advisory opportunities. Just like Fortune 500 and global institutions are planning to invest and integrate digital assets into their models over the next 3 to 10 years, if you plan to still have an active career in finance over the next 10 years, let's consider some advisory options. Now, I say let's put our strategic thinking hats on to think about revenue, because it's important to be clear about what you actually want. Before we focus on the clients, let's focus on you. What do you actually want? Do you want transactional revenue, which means it's a one and done package or product? And usually transactional revenue tends to be a commoditized product. Maybe you prefer project by project revenue. Now, this usually falls in the arena of custom work, and custom work usually is a premium service that has higher revenue, higher profits. And so think about that as well. You know, are you interested in project revenue? Maybe some of you prefer time-based revenue. That's pretty much the model of the industry. You know, you work 100 hours and you get an hourly rate. However, that model tends to be very limited because you only have so much time, and hourly rates can typically be capped based on what the industry, based on industry standards. Or do you prefer recurring revenue? So before you decide on what type of crypto service, package, or product you'll create, you need to figure out the revenue stream clients will flow into. So you may start with crypto taxes, and that service usually falls under the service transactional based fees. But the goal is not to just do a one and done service. It's to guide them into recurring revenue and project revenue as you understand their bigger goals. So whatever your offer is, ensure it meets your ideal cash flow scenario. And as you know, 2022 is likely to be a down year for many crypto investors. Capital losses will be high. And so many have no idea how to navigate the complexities of bankrupt companies, whether they filed Chapter 15, Chapter 13, Chapter 13, Chapter 11. They don't know how to navigate that. That's not necessarily an everyday occurrence. And so this is where expertise matters when people need help. Now, there are tax advisors I know of charging over $2,000 just for a crypto tax audit for individuals, and even more for businesses. Now, that is separate from individual and business filings. You know, no different than when a company they had shares in goes bankrupt. people need help navigating their tax losses. And seeing how the stock market has also been down all year, investors are looking for experts to help them get the most favorable outcome for their losses. So now is the time to share your insights with clients and prospects about how to turn a loss into a multi-year tax advantage, if possible. And if you can develop a multi-year strategy with them, retention and referral rates are likely to increase. Now, this next one is desperately needed in crypto. You see, many crypto investors struggle to proactively plan for taxes, especially when they know they're going to get hit with capital gains. Now, one reason for this is that the crypto ecosystem, it is very complex and it's easy to lose track of your transactions. Let me give you a visual example to bring this home. You see, in traditional finance, reporting is pretty straightforward. Regulators work directly with institutions to share the financial transactions of its users. So the paper trail, it's relatively simple. But when it comes to digital assets and DeFi, which DeFi means decentralized finance, well, it gets complicated. You see, the minute someone moves their assets from a crypto exchange to a private wallet and then into the DeFi ecosystem, well, transaction tracking can become complex. And since money is moved at the speed of light, there are hundreds of transactions that can happen on any given day, triggering a lot of short-term gains and losses simultaneously. You see, the goal of DeFi is to earn money. Few give thought to the tax implications. And it's only when it's closer to year end that planning starts to come to mind. And this is not a unique situation either, because the majority of crypto users interact with DeFi in some capacity. And as an advisor, consider developing a quarterly subscription crypto audit service to help investors systematically plan for capital gains and losses, because systematic planning and crypto are unfortunately not synonymous. And here's another thing to consider. Become an ally to your crypto clients and prospects by helping them understand the importance and the IRS requirements to track their crypto transactions. You see, the short of it is that most crypto transactions are taxable. There's only a handful that are not. So I call it putting crypto to work. So what's the definition of putting crypto to work? They're trading it, lending it, borrowing, they're earning, staking, selling, paying, trading, and swapping. Those all trigger taxable events. Now, if you're a rockstar tax professional, crypto is a very lucrative niche for those who help clients dive into strategically planning for their taxes, especially with crypto. The early birds will get the best clients. And it's not just their the investments. Chances are they're invested in other things. So you have to look at the big picture of their finances and not just focus on crypto only. So I encourage you to attend as many crypto tax courses as you can to get up to speed on the tax deductions and the credits and the strategies that crypto users are unaware of that you can show your expertise in. And quite frankly, it is very easy to spot crypto clients, as we all have to answer the virtual currency question. So proactive tax planning is also a long-term client retention strategy. You see, this gives you the opportunity to discover and ask questions beyond their crypto activities. And like I said earlier, to get a holistic picture of what their bigger financial goals are. So don't overlook the importance of this question, because it opens the door for you to position your premium services as an opportunity for your crypto clients to experience the benefits and savings of proactive tax planning for their entire financial life and not just the crypto side. And so good news is that there are many crypto tax tracking apps out there that helps crypto users get some quick answers. And so these tracking apps, this is one of them, Accounting, they have guides. They've created guides to help people answer their quick questions. And as you learn more about crypto taxes, I encourage you to share your insights in your email newsletter and in your blog to help crypto users see that you understand their challenges. Because quite frankly, there's no shortage of information and guides out there to help people understand how crypto taxes work. But at the end of the day, they're looking for consultants, advisors to actually help implement, because it's one thing to learn about it. It's another thing to know about it, but being able to implement this. Now, the crypto tax tracking apps, they certainly help. They are very helpful. I personally utilize it. But at some point, I still have to talk with my CPA to figure out what's the strategy we're going to use, whether I'm in a capital gain situation or a capital loss situation. And so at the end of the day, at least for me and many crypto users, we value advisory expertise and strategy at this point. It's not about telling us how to, whether or not you're pro or for or against crypto. It's more of, based on my situation, what can we do so I can have the most favorable outcome? That's all people are interested in. So let's spend some time talking about strategic conversations, because there's a lot of different ways you can approach this. And this is just a quick list. Definitely as you start to work with crypto clients and you start to ask strategic questions, it will open up doors to be able to dive deeper into their, like I said, their bigger picture needs. So here are some ideas to help you with strategic conversations. One of the first is that they can hold, right? So they can hold their crypto until short-term gains turns into long-term gains. So when you have a conversation with a client and, they're talking about, their crypto activities, asking the question, so what are you focused on? Are you focused on the short-term or the long-term? Because a lot of crypto users are buying and selling and trading and swapping their coins like multiple times a day, if not per week. And so knowing that, helping them to say, okay, let's take a step back. Like, are you interested in paying short-term capital gains or long-term? And being able to show them the benefits of holding, waiting. But here's the problem. Crypto is so dynamic. It moves so fast. The idea of just buying and holding outside of Bitcoin's one thing, but if your clients are involved in all the other coins, such as Ethereum and all the other altcoins, that becomes risky because we have no idea what's going to happen on any given year. In fact, for as long as I've been in crypto, one of the things I know that I've seen to be true is that every quarter, crypto is different. The price moves differently, projects fall off, new projects come together. So it's hard to say, well, just wait around a year. But for some clients who are only interested in, say, Bitcoin, Ethereum, being able to have them look strategically and say, hey, how can we turn your short-term gains into long-term ones? And so being able to have that kind of that conversation is important. Then there's also offsetting capital gains with capital losses, right? And this is just another strategy for lowering the taxes of crypto investors, where what they must pay is offset. So let me take a step back. So to offset capital gains, they do so with capital losses. Once again, this requires strategy. This requires talking to their advisor, their CPA, whoever their tax advisor is, and being able to say, what's our game plan? And so for some, this would be a strategic conversation to have. Then there's also selling in a low income year. So if someone's waiting for their crypto gains to convert from short-term to long-term, there's also a timing element. And maybe it's saying, hey, if you do want to sell your crypto, maybe you should wait for a low-income year. So once again, we're just having conversations to see what's possible, because everybody's situation will be different. And then there's also reducing their taxable income, which is closely related to selling their appreciated assets in a low-income year. But it's all about, tax minimization, right? How can they lower their taxable income? And so being able to say, hey, there's different deductions and credits that maybe can bring your taxable income down. But once again, we're looking at the bigger picture. And so when you shift crypto users from just looking at only what they're doing with crypto to let's look at your entire financial life and let's put together a game plan that makes sense and that is favorable for you, that will gain attention. And that will definitely gain clients more so than, okay, you check the box, send me your information, and I'll file your taxes and off we go. It's better to have a conversation because crypto tax clients, this is high level for us. Like taxes are top of mind, especially as towards year end. And then there's also opportunities for them to invest crypto. So if they are absolutely sold on it, there are self-directed IRAs out there that allow for the purchasing mainly of Bitcoin. Most of these IRAs I've seen out there, they're focused on Bitcoin. So that way they can pay taxes later down the road in retirement. However, I think one of the things we're going to pay attention to is regulations. I saw that the Attorney General was not quite happy with Fidelity coming out saying they're allowing crypto investments. And so they may want to cap it. They may want to say certain plans are not allowed to invest in crypto. So we're going to see 2023 will be able to help us understand what is allowable. But as of now, self-directed IRAs are an option for those who still want to participate in cryptocurrencies, but they want to also defer their taxes. And then there's also, typical gifting. So depending on what their situation is, they can gift, right, their cryptocurrencies to their family members, and the same, gift allowances apply. They can donate their crypto to charity if that makes sense. Although I don't know too many people who are happy about parting with their crypto that they, bought back in 2020 very easily. So, but it's still a conversation. It may make sense. But, once again, it's about having that conversation. Then there's also, hey, have you considered moving, right, to a no or low income tax state? Because, as of now, state level income taxes, they do apply. And so, certain states are definitely pro crypto more so than others. And so just being able to pay attention to say, hey, maybe it's a life relocation. And for some, actually, it's interesting. In 2020 and 2021, I know a lot of crypto users who were moving to more tax-friendly states en masse. So that was just an interesting thing to pay attention to. And then obviously bequeathing it to their estate. I would say, one of the final minimization strategies is to, give some or all of their crypto assets to their estate. And being able to set that up, that's, outside of my expertise, but I do know of those who are utilizing that as a way to, not so much for themselves, but more so also for their heirs to be able to pay less taxes, when they do inherit crypto. And then lastly, this is one that's very important, especially as I talk with businesses that are involved in cryptocurrencies, asset protection strategies. Like, what does that look like? To be able to say, hey, I own crypto, how can I protect this asset? And does that require setting up a legal structure like an LLC, an S Corp, a C Corp, a charitable remainder trust, private placement life insurance? Like, people are looking to say, what are my options to be able to protect my assets but still participate in the market? Because as you saw earlier, as we move out of that trough of disillusionment into early adoption, that is definitely going to have a direct impact on price. And no one wants to be locked up in a strategy that doesn't allow them to take advantage of that price appreciation. So being able to say, okay, well, what can we proactively do? And all of these, especially asset protection strategies, those are not cheap strategies. Those are premium strategies, but they also require conversations, right? They require multi-steps. And so an asset protection strategy can easily be a multi-year engagement, just depending on the individual or the business that's involved. And then there's also tax loss harvesting strategies. Now, this is more of an advisory role than a service-based role. You see, there are companies like Zenledger and Accounting that helps users take advantage of tax loss harvesting opportunities. Now, the goal here is to share with clients the first steps they can take to be proactive. Now, some advisors are offering paid strategy sessions to educate crypto clients about the tax tracking apps that exist, coupled with their advisory for the individual and or the business's goals. So the apps certainly make it easier to classify and calculate capital gains and losses. And so your job is to use this information to trigger other services. Now, keep in mind, one of the most common questions I hear from crypto users is a bit of confusion about what their cost basis should be, as far as like what method. And the reality is that it depends on the user's activity. And this is, once again, where strategic guidance is needed. So what I've heard from other CPAs is that there's a couple of them, right? So there's, FIFO, and this actually works best for buy and hold long-term investors, right? So they are likely to qualify for long-term capital gains, but it also, in the short term, also results in higher capital gains. Active traders, HIFO usually works best for them. This is the result is likely to generate the lowest capital gains. And so, FIFO pulls from the oldest and likely lowest transactions. And the issue here is that if users are selling during a bull market, the capital gains are likely to be higher than other cost basis methods. Active traders, on the other hand, HIFO ensures that the highest transactions are pulled first, and they're likely to show the lowest capital gains possible. And there is also a possibility that some older transactions can qualify for long-term capital gains. There's also a third one called specific identification. This is actually one of the most advantageous and, unfortunately, the most challenging of all the methods, because companies and individuals can manually select the crypto that is being sold in terms of the holding period and the cost. Now, this particular method, specific identification, that the IRS does allow, they allow all of them that I've shown so far. This requires strategy and attention to the detail, and it's ideal for low volume traders. Because if you're dealing with a high volume trader that wants to do specific identification, you're going to need a system for that. Now, let's look at an example just so I can help put this into context. So let's say, you have a client, and they made a few purchases of Bitcoin, over the last couple of years, anywhere from 7,000, they bought it, as high as 21,000, right? And then 35,000. And then at some point they sell it for 30,000. And you can see that from their wallet. When you look inside the wallet, there are that TNX, that means transaction number. There's a transaction number. It's date stamped, it's time stamped. So everybody knows when the Bitcoin or the cryptocurrency was bought or sold. So in this particular case, you can see that and this was a rough calculation, you can see that HIFO is the most advantageous for the investor, whereas FIFO is the most advantageous for the IRS. I have heard a lot of sentiment that LIFO just doesn't really pan out. It's usually FIFO, HIFO, and specific identification that provides the best results, but you have to calculate the numbers. And this is where the crypto tax tracking apps come into play. They help to calculate the numbers as a first pass. And then there are advisors who are then doing a second pass and saying, okay, our team is going to look at your crypto transactions and tighten up any loose ends so we can obviously produce the best result possible. So with that, I want to make sure this is our third and final poll. Do you have a list of crypto tax tracking apps that can help clients properly calculate their crypto gains and losses? And so this is really about just providing clients with various resources for them to choose from. Some of you may already have your favorites. One of the things I can say about crypto tax tracking apps is there is no such thing as a right answer. There's only a range of answers. So even if you had a client decide to use the top 3 or 3 crypto tax tracking apps, each app is going to give them a different result, even if they select the same cost basis method. And so just recognize that there'll be a range of answers. Even the IRS recently signed what did they do? They recently signed a contract with Zen Ledger, because even the IRS recognizes they need technology to be able to calculate taxes on their end. And so just keep that in mind, that all of these apps will at best give a range of answers, but there's no such thing as the right answer. So just know that caveat exists. And so I've worked with other crypto traders. They've gone through 7 different apps, and yeah, they all provide different answers. Not one provides the same. All right. And so also with strategic planning, I would say it always really depends on the client. And so once again, even bringing up the conversation of tax loss harvesting, right? And this is all about identifying assets to sell at a loss. It's November 30th. So, you have 30 days to let everyone know that if you have not considered tax loss harvesting, especially your crypto clients, sending out an email or a newsletter to say, look, like, now's the time to be able to think strategically about this and make some moves. And so chances are, I'm willing to bet that Bitcoin's price is going to go down significantly in December, simply because there will be a lot of tax loss harvesting that will be happening. So the market is definitely going to be lower. Well, definitely, the market is likely to be lower based on where things are going. But just know that there are apps out there to help perform this function. There's some free resources at altmoney.com if you're looking for other resources on how to help your clients figure out some apps that are out there to track their taxes. Mentioned this before, self-directed IRAs, right? This is all about deferring taxes. The thing with the self-directed IRAs is also it must be purchased through a custodian. And so Investopedia actually did an excellent article by Matt Weber saying, can you own crypto in your Roth IRA? I would check that out because they give some context to what IRA in crypto investing actually looks like. And then, as I mentioned before, asset protection, entity structures, looking at your services and developing packages that cater to this niche. And so here's the thing, if you walk away with one key idea, it's that crypto users are ultimately seeking out cash flow, and they're seeking out wealth management services if you get to their core. You see, many of us who are in crypto, we view money in terms of layers, right? So we start with dollars, euros, whatever our foreign currency is, and we convert our fiat into cryptocurrencies like Bitcoin, Ethereum, and then we learn to interact with wallets and exchanges to store and send and receive our digital assets. And from there, we work our way up to be active in decentralized finance strategies, which includes trading, staking, lending, borrowing, earning, betting, gaming, or just holding it. And all of this is with strategic intent to maximize our wealth and to minimize our taxes. So whatever the conversation is that you have with your clients, know what their reason is for adopting and moving into crypto. And chances are tax minimization and wealth maximization are high at the list. And so start to strategically think about building and future-proofing your pipeline. Whether it's, an email or a newsletter that just gives you that provides users and clients with crypto tax insights and tips, your website, your social media, especially with video. Video has the highest engagement to say what to do if X videos, right? What to do if your cryptocurrency exchange files Chapter 11. A lot of people don't know what to do. So having that video out and being able to share that with your network will show that your expertise and advisory in the space. Obviously, there are premium services you can start to create. This is for those who are comfortable with doing full crypto audits or, whether they're, or just becoming educated about how to do them. What does that look like? Or partnering with a CPA that does full crypto audits. Maybe it's a partnership. Then there's also recurring services. This is an important one where there's quarterly tax planning, not only for crypto, but also for their business. And then you can also look into crypto payment accounting services. Because like I said, you saw earlier how Visa is moving into allowing people to basically make purchases with crypto. Well, that also means that there'll be crypto accounting services that are needed. And so being able to give advisory about it, there are already apps out there that integrate with like QuickBooks and other accounting software. So being able to say, here's what integrations exist if you decide that you want to start accepting payments in crypto. And so I encourage you to learn as much as you can about this field, and specifically the niche you want to focus on. Because here's the thing, blockchain technology will impact everything. Identity verification, mobile payments, e-commerce, insurance, resource management, healthcare, shipping, real estate, manufacturing, banking, industry, energy, advertising and marketing, entertainment, tourism and hospitality. You see, if the ability to verify information in order to execute a transaction is necessary, chances are blockchain technology will play a role. And lastly, if you're looking for additional resources, definitely check out Alt Money. That can help kickstart your journey as well into research. And with that, feel free to connect with me on LinkedIn. I'm pretty active there, and so I have enjoyed my time with you. And Gary, back to you.
All right. Thank you so much. That is a waterfall of information there. So before we went live, you did say that you do other courses. Where can people find some of your classes? And you mentioned during your presentation too, just about Go Learn. What are your
Yep.
So Alt Money was
yep. Yep, you go to Alt Money and I have a list of courses that are available, list of tax tracking apps, list of books. There's actually a book on there from a CPA who wrote about crypto taxes. And so there's beginner guides. There's a lot of resources that I have put together on this site that you can just start your journey with.
Okay, fantastic. And I did put the presentation into the chat so people can download it there. And then also I dropped in the link to our YouTube channel, which is where this recording will go. Again, probably about 5 days before we'll get that posted. Sonia, thank you so much for sharing your depth of knowledge here with us today. And just a reminder for all of those who intend to participate in Insightful Accountant's Top 100 Pro Advisor program. We will kick that off in a week or so. I don't have a confirmed date yet, but sometime in the next week you'll see it. So look at the website, look at social media, follow our newsletter, and you'll see it when we announce. So Sonia, again, thank you so much. Everyone, thank you for taking an hour or so out of your day to join us and learn. Thank you all. See you soon.
Thank you, Gary.